Welcome, it's the Crypto Sniper. How are you doing? I largely do not engage with meme coins, it has to be said. And even less so, captured politician type meme coins such as Trump, Melania, and all the other garbage that appears to be out there. In fact, I am totally aware that fundamentally one or two of these meme coins will probably be turned into some form of payment system interacting with X. Doggy is potentially a front runner, and turn into mega caps one day as their true placeholder role turns into something far more sinister in terms of the digital world. But anyway, what I'm trying to do here is I'm going to take you through really short time frames. Sometimes I get asked, one of the ways that you best prove the robustness of a particular trading system is when you really break it down to the molecules on the short time frames where it's truly tough. Most things fail on short time frames, by the way. And again, I'm not taking you to trading small time frames. I believe the best work is done from the H4 pattern views. That's the hourly, 4 hourly, right the way through to daily, weekly, and macro. I get super excited by major monthly setups. The probabilities, the scale of the move, the fact that it's like a whale carcass. You can shark gnaw on it for ages and be fed and nourished all the blubber and good life that you can possibly eat when you get the macros right. Of course, there are corrections, there are pullbacks, and obviously they're longer on bigger time frames, but I think the patient long-term accumulator spends time on getting well positioned on the macro and thereby generally is riding the right waves instead of getting sucked into sinkholes. So A, we're not short time, especially 5-minute and 15-minute traders. B, we're not crypto meme traders at all. However, I'm going to take you in this example where we even go into a politicized, no use case meme coin that has zero history, next to zero history. And I'll be showing you that in a minute when we go to the charts, and showing you how, if you were a perfectly executing HVF method trader, you might have done. And by the way, I rarely execute perfectly on single setups, and repeated in a row perfect executions are not the expectation you should have. Always measuring yourself against perfection is always to be disappointed. Sometimes you just have to be content with a pretty decent execution on a pretty reasonable setup that ends up doing what it's supposed to do, for which you get the major meat of the trade. Some of these examples will have incorporated early entry stop loss placements that squeezes the risk a little bit more. Some of them will have utilized overperformance where you get a bigger outside risk, and some of our more advanced techniques like trumpets and slides and other aspects overlaid in conjunction with the hunt volatility funnel setup. Let's go have a look at the charts and get straight on with this. So here is it. I did it actually in a tweet feed with annotated charts. But before we do that, let's actually just show everybody what the history of this chart is. I'm going to put my eye on here and show you the daily chart. That's the daily chart of official Trump chart. Now, I don't know about you, but on the daily, there's not too much to read apart from a listing and a pump up push and something going on right now. And even if you drop that to sort of 8 hours, you're not going to see too much. You go 4 hours, you're going to see a pump, a pullback, a pump, and then some form of corrective action going on here. You can go to 2 hours, which is already getting pretty low time frame. It's still not entirely clear what's going to happen next or what happened originally. And you can go right down to the 1 hour and you're looking at it like this, and it still would have been a very tricky trade. I wouldn't say there's anything high probability I would have stormed in to do in here. However, once we get into the much lower time frames, there is things to see. And in this instance, they all performed. So obviously I've chosen something that surged. So I kind of had the hindsight that this thing had setups, and it was likely that they performed. So as I say, this is not a claimed outcome. This is just an example in case of how a methodology might have done in a particular period. And the first period I'm going to take you on is what looks largely to be a straight line up to the all-time high here that was in and around $79. Let's go and see that Twitter thread. By the way, if you are not following us on X, it's called X nowadays, as you probably know, you might be missing some earlier alerts than YouTube allows us to do, because YouTube is typically long form content, not just a quick 250 characters. So here on the 5 minutes, we have two upside HVF setups. It might be worth showing you the chart actually without the eyes. Let's go right the way through here, pull it through. Let's go to the 5 minute time frame and pull the whole chart through. It's not a long history, it's not a long journey to pull through, just to get to that upside move so that you can see how everything went down. So here's the chart that we've got in question. How would you have carved this up? Well, this is how HVF method would have had you do it. You first have a scraggy first upside HVF there, with a look one way, dip down, and a major move to the upside there that ran and made a target. Had a pullback, had a minor surge higher, and then corrected all the way down pretty much to the funnel level support. So there was key support in and around. You can see these values here around the $21 after you went right the way up top here and ran the better part of $30 from your entry, which would have been in and around $21. Risk rewards that were earned were around 9.19 for your trade. Let's have a look at what happened next. Well, what happened next is, let's draw it with a pen, let's go fat Koki. Is after finding some support and getting a wick round here, you went up and over, another little final capitulation, making for a first and then what we call the second. Lots of selling wicks. See these wicks across here, wicks across your wicks. We call that, it looks like a shooting star, very close to hammers here. Call that kettle drumsticks range definition. And then you had a feign and break through the line, feign back in. Then you had a move through to your first interim. Actually, you wouldn't notice it, but this is on obviously an extremely low time frame, because this chart already is 5 minutes up top here with me, 5 minutes. So you can just imagine how small a time frame this is, but everything is by proportion. Little wind up on what we refer to as our first interim level. Up you go. Little bit of a correction there. It's a broadening structure to the downside, implies continuation. Walkout, you make HVF2's target. We actually have put on a trumpeter. You can learn about our advanced techniques where and when overperformance is expected, but you would exit on the break of the lower line in this instance. There are instances where you will exit on the higher line, but it is typically on a return down. It could have seen you exit over there actually, and that would have been an even better performance in a shorter time period. So in short, when you break out the top and you pull back down through, you close the trade. So I've given you the least good exit, which is a little lower and a bunch later. Remember, it's not just in HVF method, it's not just about how much you make, it's how quickly you get your capital to make more. And leverage costs something. For every minute that you are in a platform, they are charging you. So less time, faster moves, breakout trading, fast moving asymmetric rewards with tight risk. This is your game. You can see that's a 14.16 15 reward, and that's done at that point over there. In actual fact, on your best case scenario, might have got out there. So there were two upside HVFs, both of which made their targets. One actually gave you a double digits risk reward. Okay, all well and good, but it was a pump. It was an upside. You know, that was perfect execution. Okay, let's say you only got 50% of that, the meat in the middle. You're a bit late to spot it. You got in once it had already begun moving. You closed at the first and earliest target. You got a percentage of it. You didn't get 100% of it. You didn't optimize on entry. Let's just this is theoretical. Everything here is theoretical, including me trading on 5 minutes and 15 minutes. I'll have to be very, very bored and have money to burn to do that, particularly on something like this that I wouldn't hold as an investment item. Then you have your all-time high. Let's have a look at this chart. Your all-time high, that's up top here, and you can see you got a slap in the face down. We call that a slap in the face. A sudden high volatility return against the move. So this is where the volatility was getting spiky, super spiky. Again, you're on the 5-minute time frame. By the way, you even got a squeezy against that bagel that pushed you up, and that's where, as I say, your optimized exit might have come instead of over there. We're looking at this later on. This is the all-time high. That's actually 79. Sorry, I hid it behind there. It's 79.345. That's your all-time high, and that's your slap in the face. Dish. What typically happens when you get the first ascending in a new trend is that everybody is still largely bullish, but the first of the early money started to look down and wonder about selling. That's where that vol came in. There's no bid stack forming because it moved too fast upwards, so you don't have depth in the bid stack, and some guys go, I want to test the exit strength on this. Is this all fluff that I've made here? Unrealized profits when I try to get in, there's no get out. There's no bid. Let's check this. Boom. You get the slap in the face and it gets checked, and maybe it's not near as thick as you see. But don't worry, everybody shows up. Trump's going to win the election. Anyone who is waiting for a dip sees the dip, buys the dip, and you get a secondary, more rounding ascent that fails to take out the previous high. And then you get another test. More grinding on a bagel that could have made an inverted. In the end, it probably makes a rising wedge structure, and you get your first hard down leg that fails to run the last low. Very key point. If it had just run the last low and then started rounding bottomed, it could actually base and be set to go up. But it fails to run the previous low, meaning that there is some bid that comes in that's ready to get exhausted. That bid comes again under. So you've already had bid rescue once come in over here. Now you're getting bid rescue again. It's more grinding. It's having to come up all the way under here. Everybody buy Trump coin. Peak tweet. Pete shout outs and Telegram groups. Peak shout outs for, yay, we want Trump. He's going to save us. He's going to make sure we get vaccines for cancer. Yay, I can't wait to get my cancer vaccine with Larry Ellison, Elon Musk's friend. I can't wait. It's so exciting. Please inject me up some more. And all of that stuff hit you up. Boom, boom, boom. You can see you're selling across the high. Each time you're failing to make a new low, there's already people exiting before the sell-offs are happening. But it's quite flat across the top. In fact, these levels were very similar to that level, which wasn't far off that level. All the grind is here. The dip buyers are exhausting themselves. They came in here, they came in here, here they all come. They charged it up much harder and faster there. They supported it here tenuously, and then they got absolutely poleaxed. But then they finally regathered and reinforced over here. Now they're trying to hold it up. Then you got this beautiful little ledge. And this is a classic little, very tight, grindy little ledge right there. And you've got this bagel, you're waiting for that break. You could have traded the ledge break early, or you could have traded lesser reward than I'm indicating, the bagel break, to be early on this trade. Stop loss on the other side on the high 3. Total profit 11.5, risk reward. By the way, inverteds make targets faster than upsides often, particularly first ascending structure. This is known as an ascending structure because all the highs are quite similar and high, and all the lows got bought really strongly up. So it's almost like an ascending triangle. You can see it there. This is a very, very dangerous structure because most people sees bullishness. You're seeing this. You're seeing that. You're seeing all of this up, but the power is changing. This was snapback strong. That was a bit grindy, but you gave away. But then you came back to hold the level before that level, and now you're pre-exhausting yourself for a lengthy period without making a new high. There's no fresh money ready to take out the new levels. This is being held, and you're struggling to hold here. Pretty flat across these two, and then this very steeply ascending structure there that gives you your final low 3 right there where the green line is. You could have waited all the way for the triggering event there. Doesn't matter when you waited, you made target super quick. By the way, that short from the level we're showing is $70.35 all the way down to 45. That's a lot of beans, guys. That's $25. That's $25 out down to 45. I mean, that's an immense percentage that you've done there. And it is powerful, and it happened super quick. Let's just remind you, each candle is 5 minutes. You got one candle. Let's clean our face a bit here. Let's use another color. Too much TG pink might make us look feminine. There we go. 1, 2, 3, 4, 5. The green one. 6, 7 candles, where each candle is 5 minutes. 35 minutes tops. Don't forget, you wouldn't have necessarily got in right at the beginning of one candle and out right at the end of the last one. So somewhere between 30 minutes and 35 minutes, this thing was done and dusted. $70.9, $71 down to $45. That is also a called reversal after what is currently an all-time high exhaustion, where you got your first slap in the face. Pretty damn good. Risk reward is 11.51, but look at the dollar amount that you've taken off the table there. That's huge, huge, huge. So we cancel that chart and let's go see what happened next. There was a second inverted HVF that formed. Subsequent to a rally, there is a structure over M5. This may have produced a potential to target of 7.15. Let's have a look at this one. It's a 15-minute. This is almost a macro for this example, because we've already showed you only 5-minute charts, not one but two. Now let's have a look at a 15-minute, a much bigger time frame. She had a rally from your 45. This is up at 48. You got another slap in the face that turned into a major dip buy. Boom, 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 boom. This is skittishness. Bang. What did you form up? Flat bottom. Flat bottom. Talk to me about the lady with the flat bottom. There she goes. There she goes. All the tops being squeezed like this after this stilt in the ground where you snap back. That's exhaustive. That's tested the bid stack. Then you're coming in, you're holding it here. You can't hold it much higher. You're holding it at a very similar level, but these impulses to the upside are getting less high momentum. Look at the grind here for the third high. Grindy, grindy, single candle, and back we down again. Oh, we didn't hold that for too long now, did we? In fact, you would have got a primer. You see this again, and there might have been something on an even smaller time frame. You could have gone to the 1 minute with this, but I'm saying, look, I'll just take that as final stop and the entry on this break. It also had the benefit of the point of control in volume by price for that pattern being roughly there. I'll go in there. Thank you very much. Stop over there. Target over there. Take yourself 7.15. You could have got out impatiently on a time stop. We have real methodology to do that. Or you could have hung on and you would have got your eventual profit. That is an inverted setup after another sell-off. So which patterns are ruling? Everyone's going to say, Francis, but what does that mean? What Trump do next? Make me rich. Make me rich. What Trump do next? No, I'm not making you rich. Book a call below and find out. Learn the method, learn the skills. You can do this for yourself. You can be surrounded by people doing it, including myself, doing updates for our community and engaging in the markets. But what I can tell you is the most recent patterns that have performed are downside ones. And the one that called the reversal means you are currently in a state of reversal. So you need to be careful out there. This could have potential to roll over. Is there a pattern there right now? I have nothing to show you or tell you about that right now. There's not enough new information. That is where you are at 34. Don't forget, you could have got short on the first one and stayed short the whole time on the basis of first inverted in a new trend, which allows for overperformance. You could have taken some off at the target of the first HVF and still be short. You would have been as low as 32 and currently 34. All the way down from 70.9, which is obviously lower than 45, where you took your first bunch of cash off. So this is an example of two upsides and two downsides on ridiculous time frames, on a ridiculous politicized meme token. This is, and people tell me, your method doesn't work, or I don't see the value, or this and that. This is the worst test case. It's the worst conditions for you to be trading anything. Everything is wrong with this. Let me just tell you, everything is wrong with this. The chances of me being in any of these trades, extremely unlikely. Extremely unlikely. Just because all the reasons I've already just mentioned. Now imagine how much more when these patterns are reinforced with real duration on bigger time frames that set up trends for rolling periods where you just end up being luckier for longer because you're holding out for something that's continuing to move. Now wonder why I remain investment long in XRP because of that macro setup. Even though there will be pullbacks and occasionally I leverage trade only to the long side. Why? Because the HVF methodology has given me my primary focus that will serve me best. Do you want it to serve you best? Are you ready to start making life-changing money? Can you become lifestyle focused where you're lucky like me looking at a hotel over the sea here, beautiful Western Australia, Perth, probably going to hopefully meet some community members and maybe a few new friends, by the way, who are coming to see me on Monday at 11 o'clock. If you are nearby, Claremont in Western Australia, Perth, you're welcome to join. We're taking out a coffee shop with dark chocolate. You can tell who chose the venue. Ooh, yes, dark chocolate with a coffee shop in Claremont. It's called Cocoa Black, K-O-K-O Black. That's right. A couple of community members will be potentially there, and maybe some new faces. If you're a follower of the channel in Western Australia, you're welcome to come and say hi. Until next time, hope you enjoyed this. This was a technical analysis of charting on one of the worst things you could hope to deal with, over one of the worst time frames you could hope to deal with, to what other people would look at on a daily and just see as utterly random, that actually can make sense to someone who has the right key and the right template. Anybody else looking at a chart like this will have random, wouldn't know what to do. So how do you know it's going to split up like that? How do you know whether it's coming down or not? How do you know anything about what's going on? Well, how close are you looking? You know, my parents used to do gemstone hunting, and we went to sites. It was a resource-rich country, much like Western Australia, South Africa, and they'd take me along, and I'd get bored out of my goddamn mind. But they would have this chip, the stone chipper, and you would have to get on your hands and knees if you saw something interesting, and you would chip the surface of the stone, because every stone is caked in sand and dirt and rain that washed dirt over it, and you've got to try to see something that catches your eye, a little bit of a texture. Like I spotted this. I've trained to see things like this on a bigger time frames, and then I drop down and I see this, and then, you know, on the way down I see that, etc., etc., etc. All of these things happening, and slowly you see more. But those that are just walking on the ground and on top of stones could be walking on diamonds and gold. They're never looking down, and when they see something that might be remotely interesting, on the odd occasion they look down. They don't get on their hands and knees and micro look and chip the surface, where everything will be revealed. Semi-precious agate, tiger's eye, potential diamond, or ore holding gold, holding silver, etc., etc. By the way, Market Sniper, go and watch. Gold still has further upside, so crypto could too. I'm not calling anything a crash. Right now we're going to be watching. In fact, would you like a little bit of Bitcoin to finish the YouTube? Let's show you Bitcoin, something a little more serious than all of us. Did you take the message on the Trump trade? Yes, we are traders of it. We don't tend to do these things. It's not the time frame to operate, but a lot that is super random appearing can make a lot more sense to those that truly have method. Okay, so to help you finish off, this is a little bit of something on Trump, maybe Bitcoin. I mean, maybe we got a little bit of an upside HVF here on the 2 hour, and then a super quick update on the daily. Who knows now what's going on? This, no downsides are likely to have taken place, by the way. So I think the risk on the head and shoulders is largely dissipating. So that can's been kicked out. There could indeed be, let's not do daily, let's do 8 hour. There could indeed be a double bottom. Here we pointed out that this 92-93 zone was continually support. It got lent on very hard a number of times and then kept rejecting. So maybe the answer is, you can see this key level of 102.75. We go back to our TG pink is here, roughly there, and maybe the answer is W bottom, 2x bottom, like that. This was a rounded one. Normally you get the more volatile one first and then a more rounded one later, but this was a super vol one can't quite remember what was happening during that time. It was before the election, before the 20th. Things started to get more solid. Now you are doing this structure right here on the key level of significance. That could be an upside HVF. Do we have a target? Let's pull that target into view a little bit lower so everyone can see it, for roughly 116 on Bitcoin on this W bottom with the midpoint at the 102.75. I'm asking the question, is this a wind up over here to do that? Guess what? It could be, and you could have 116 run. And you know what? We have a token that we think against Bitcoin looks like it might in fact go higher. So there's something else that could do better. Book a call to find out why, who, and what that is. But more importantly, to learn the key points that we are bringing to you in terms of trading with a method, having known risk rewards before you enter, stops placed before you enter, either at limit or buy stop entries that don't force your way in just because you're entering it right now, that require something to happen, the market is self-confirming, and that give you asymmetric higher rewards to much tighter risk so that you have juicy R&Rs. Please remember, this was a demonstration. This was done retrospectively, which is a huge advantage. Things are far more uncertain before they happen, even when you're using good quality patterns, and they were near perfect execution in each case. You would not do that 4 times in a row, but you might get some of the meat of those moves. If you're watching on short time frames, you could have had quite a bit of juicy stuff go your way. Until next time, we'll catch you later. Links to get our free mini course below, and to book a call also below. You'll be introduced to our newsletter if you do the mini course. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.